keeping your own DNA and one way of working is key. And I think we're a bit different there compared to a lot of other firms. We have always recruited relatively young people with 1 to 3 years of experience, but we've been doing this for over 15 years. So we have talent in all layers of our organization.
Hi, Charly. Thank you very much for taking the time to meet with me today in your offices in The Hague. Could you please first introduce yourself and maybe share with us the defining moments of your successful career so far?
Hi, Louis. Great to have you here in The Hague at our head office. It's a renovated building. The government used to be seated here, so we completely renovated it, and we're very happy to have you here. Yes, my name is Charly Zwemstra. I'm the founder of Main Capital Partners. The defining moments in my career, that's a good question, of course. I learned a lot from, I think, the way I was brought up in an entrepreneurial setting. And then I started working as a management trainee for a bank, quickly chose to join a private equity subsidiary of the Dutch National Investment Bank. Later that developed into Alpinvest, where I was heading the technology group, and I experienced the dot-com bubble there. So lessons learned, focus on more mature, profitable software companies, tech companies, was really a defining moment. And then I started together with a friend who already started a consulting firm in corporate finance called Main Corporate Finance. Then I joined, changed the name in Main Capital Partners, and we started to invest in companies taking majority stakes in tech companies, and changed the name to Main Capital Partners. I think that was a defining moment, and then we were out there on our own, working very hard to take the first steps to build Main.
And could you please then introduce your firm, Main Capital Partners, and its history to
Yes,
us?
Main Capital Partners is a very specialized firm investing in majority buyouts in B2B enterprise software. So we build software companies starting locally, quite small, introduce our playbooks to create organic growth to those companies, and do selective buy and build, integrate those add-ons, but also combine within the portfolio to quickly build scale and also international presence. And in that way, at the end of the day, that results in more resilient, sizable, differentiated international software groups with better exit optionality. That's what we do. Over the years, we started very small on a deal-by-deal basis, like just mentioned, buying a company, looking for the capital, raising capital, deal by deal. But then in 2006, we started the first fund, 12 million, still very small, then 45 million, 85 million, 240, 560, 1.2 billion, roughly 2.5 billion was the last fundraising. And nowadays we are with 90 people spread over the DACH region, the Benelux, but also the Nordics. We started in France this year with a new office and a new team, did the first 3 platform deals there. And in the US also a sizable office and 6 platform investments in the US. We're working on the 6th at this moment. So that's who we are nowadays. Very active. I think we buy over 50 software companies this year, close to 10 exits. So a very active company.
What is your role today as managing partner of Main Capital Partners?
Yeah, over the years the role has changed, obviously. In the early days I was involved with every new investment and also on the board of those companies. Nowadays, when you buy 50 companies, that is impossible, of course. So my role currently is being the chairman of the investment committee, which is an important role. I'm the chief investment officer. Next to that, I lead the partnership meetings. Once a quarter, we have an off-site partner meeting where we discuss updates on the regions, on product markets, new strategic initiatives, new hires, new strategies, new regions. So the strategic subjects, we share the values of the firm with a broad group of, let's say, the most senior people, around 12 people. And then we take it from there. that's an important part of my job, to make sure that we are all aligned and share the same investment values and same investment culture. We have created a very strong DNA, and I'm guarding that DNA. One way of working is key for us. So I mentioned the IC, we have an executive committee which I share, and then of course the partnership meeting. I'm also chairman of roughly 5 companies in the portfolio. So every new fund generation, I continue to lead a limited number of deals.
You touched on it, but could you please explain your investment strategy?
We are an extremely focused and disciplined firm doing only B2B enterprise software. So we start relatively small at the lower mid-market. We have 2 strategies, so smaller majority buyouts in main foundation. The larger buy and build machines, they're booked in our flagship fund. We are currently investing main 8. Shortly we will be raising main 9. In those funds we start with companies in foundation, less than 10 million in revenues, and with the flagship strategy as from 15 million in revenues, profitable. And then we start stimulating organic growth by implementing our playbooks. We have our own performance excellence group within Main. And then we do the first add-ons, integrate those add-ons. We start combining within the portfolio, sometimes over different funds, go to the advisory committees for approvals, but at the end of the day, build more sizable groups. We do that with a product market approach, where we also engage with future buyers of our portfolio companies. So we know what the strategic roadmap and the tech roadmap of those strategic buyers is, and we can anticipate on that. So at the moment that we want to do an exit, we are really ready for it, and we have entrance to those buyers. So building quite quickly a relatively small company towards a sizable international firm with a higher percentage of recurring revenues, more profitability, and more exit optionality. That's in a nutshell the strategy.
You have managed to successfully scale up your organization by replicating its culture, its playbook in other geographies, and empowering local autonomous teams. How have you managed to achieve this?
Keeping your own DNA and one way of working is key. And I think we're a bit different there compared to a lot of other firms. We have always recruited relatively young people with 1 to 3 years of experience, but we've been doing this for over 15 years. So we have talent in all layers of our organization because those juniors become more senior. So at a relatively young age, at Main, people have seen a lot of new investments. They have been exposed to board discussions, and they can lead their investments on a relatively young age. That pragmatic, effective, result-oriented culture sets us apart from a lot of other investment firms which have a more theoretical approach, very often hire senior people with an MBA background or a consulting background at one of the big names. That's typically not what we do. Yes, we are very smart people, but pragmatic people. And it's a mixture of business economics, computer science, data science. That is where we are. And I think protecting that DNA and exporting that one way of working to new geographies, like we did to Germany, inviting a senior person of the core Benelux team to open an office in Germany and build a local team with German hires. And of course, I was involved in that first year. This was 8-9 years ago when we opened the DACH region. Sven went there. Nowadays, he's a managing partner of our firm. He's built a huge track record in the DACH region. But we started with our own core DNA by exporting basically also Sven to Germany, and then start hiring relatively young local people. We did the same in the Nordics. Wessel, who was also part of our Benelux team, he moved to Stockholm in Sweden, and nowadays we have a 15-person team in the Nordics, covering all Nordics countries with a sizable portfolio and a track record. Then we went to the US. Daan, also Dutch guy, originated from the Benelux team, then went to the Nordics, and then we asked him to open the US. And he again started hiring local people, young. And then over the years, you get stronger in a new region. By introducing the product market approach, we keep these different regions together, because with this product market approach, we invite all people that are involved with, for example, security software, to dial in a virtual meeting, share their data, share the deal flow, look at add-on acquisitions, look at combinations within our portfolio, engage with future buyers. It's a cross-border exercise. And in that way, you avoid that islands develop of separate teams in a new region, but you keep them close to the core DNA of your group.
What differentiates Main Capital the most from other managers?
One way of working is very important, and you can only achieve that by recruiting talent relatively young and being aligned as a partnership. And we have always been different. In the early days, when Main was still small, people looked at us like, what a strange animal. They do it differently, because tech was associated with venture and growth. Now, as mentioned, I had my experience in the dot-com bubble with venture and growth. So I decided to focus on applying private equity principles to the tech industries already quite some time ago. And we stayed with that idea. And over the years, we have developed a more sophisticated strategy. In the early days, we were disciplined and bought for attractive enterprise valuations. We still do that. But on top of that, nowadays, we have developed strategies that are relevant for every process that's relevant to run a software company. So we know exactly how to run a software company, and we can provide these playbooks to the management teams, to the founders of those software companies, which makes us a very strong partner for the software industry. We are well known, and if you do this for a long time, you become extremely connected to let's say 25,000 software companies in Europe and the US. And they know what we do, they know how to find us, and they know what we can bring to the table. And it leads to proprietary deal sourcing. So not participating in auctions, but a direct dialogue with founders of software companies, and then a joint partnership to build those more sizable groups, with Main in the lead.
What's your perspective on the impact of artificial intelligence on software businesses? Is it a threat or is it an opportunity?
It's a huge topic, of course. Everybody is talking about it. There are a lot of conferences around it. You see a lot of GPs spending a lot of time on their general annual meetings on this topic. And sometimes they pretend that they know anything about AI, which they don't. I think it's a very pragmatic productivity tool, and that we all have to embrace this. And that's what actually is happening in society, but also in the investment world. We have appointed a tech and AI head within the Performance Excellence Group. Jason Raats, he's organizing thematic conferences, workshops for our portfolio companies, for the people of Main. We put it on the agenda of the board meetings. We have a lot of interesting findings about AI. We think it's a very powerful new technology, which will lead to massive productivity gains. But you have to invest in it. You have to work with your own data and protect these data. And then you can achieve a lot. What happened in the last 6 months is that a lot of companies started working with AI like AI is a miracle, and AI will change everything. Well, that's clearly not the case. Most companies that started working with AI and were very hopeful, they burned themselves. The results are really that productivity is not going up, but it's first going down. For example, in software coding, you can make a lot of mistakes with using AI, and you become very vulnerable. You get security issues. You have to repair them. You need additional people for that, and then you start losing time. So the first findings are not that positive. MIT is also saying this, be careful, you have to do it in the right way. So doing it in the right way will lead to productivity gains, and we expect a lot from AI. So it's the software coding, faster development of new products, incorporating AI in your software tools, I think it will lead to a new wave of growth for the software industry. So I don't consider it a threat, but an opportunity.
What has been the long-term performance of your buyout funds?
I'm really glad that you asked this because what we do, the strategy I described, leads to very favorable results. We have a low average weighted loss rate of substantially below 0.5% weighted over our whole history. At the same time, we have produced a gross money multiple of 4.7 times our invested capital over 37 exits, and it's creeping upwards, which is a reflection of the successful strategy. I think the big differentiator is that it's also very consistent. There are some firms that also have high returns, not as high as we do. We are really number one in 3 fund generations according to Preqin, but we are more consistent. Let's say 5 to 10 years ago, we did 1-3 exits on an annual basis. Nowadays, we do 10. It's like a machine. And I think that really sets us apart, 4.7 times our money, and we structure everything for at least 4.5 times, and the IRR is 44% so far, realized returns.
Who are the typical investors of main capital partners, and what's roughly their average commitment to your funds?
Yeah, these are, we have long-term investors. And of course, like each new firm, you start with the friends of the house, the entrepreneurs that you know from previous cooperations, from exits, etc. Then some family offices and small banks came in. Over the years, we have developed the firm with the sponsorship from some fund-of-fund groups. Nowadays, it's moving more to pension funds, insurance companies, firms that attract capital from entrepreneurial families and entrepreneurs. I think Alterac is a great example of that, but we have some other partners, for example, in Belgium, in the Nordics, in the Netherlands, that raise substantial feeders for our business. That's a new development, and it's quite substantial. I think we raise over 500 million from those kind of partnerships. But now, currently, that we are close to launching our new fund, our 2 new fund strategies, Main 9 and Main Foundation 3, we see that increasingly pension funds from, for example, the US, they step in, but also European pension funds, insurance companies, and the amounts become more sizable, of course.
Could you please elaborate on 2 to 3 of your transactions, explain how you source them, and maybe zoom in on how you created value or are creating value with these companies?
Yeah, it's interesting. So we have, if you go back a little bit, we invested in a relatively local GovTech play called Roxit. It was software for municipalities. We started with a company of roughly 12 million in revenues, and we did 4 add-on acquisitions. We stimulated the organic growth. We brought it to roughly 35 million in revenues and 11 million EBITDA, and we sold it to Visma, which is one of the portfolio companies of a large private equity firm. It's a typical situation. We made 5 times our money. The sourcing was proprietary. There was an advisor in the back, but we knew the management team, we knew the founder, and we built a warm relationship with especially the owner, the founder. It was very emotional, and he thought Main was the best partner for him. So it was a local buy and build play. Nowadays, we have a company called Excellence, also in GovTech. We rolled it over to a continuation vehicle, also made roughly 5 times our money, and are now transitioning that group towards a European play. We combined it with DocuMaster in the Nordics and looking at acquisitions in Germany and France at this moment with that group, with the idea to create a group with an enterprise value above 1.5 billion. So you bring it to the next league. So that's a bit in GovTech. And that was also fully proprietary sourced, that company, no advisors involved. Another example is Innovation. It's a connected care software group. It was in the days, 7 years ago, it was our largest investment, 100 million enterprise value. We even created a co-invest vehicle for that, invited some co-investors stepping in. And we have done 5 acquisitions with that company, increased the organic growth rate, expanded the business to over 12 countries. And we sold it to a well-known name in France, Legrand, the conglomerate. I think it's a quoted company in France. And we had one-on-one discussions with the CEO, actually, of Legrand. And we're able to sell that business, also making 5 times the money. The sourcing was, there was an advisor when we bought the company. It was in the middle of the summer. I took the effort together with Sjoerd Aerts, my co-managing partner here, to work in the summer and dial into investment committees of our co-investors in New York. And I was standing under an olive tree. And at the same time, I was apping with the owner of the company, saying to me, don't listen to the advisors. We have a handshake. We are going to do the deal. And so it was semi-proprietary. It was an entrepreneurial family, and there was a good connection. And his son actually was on the supervisory board for a long time at Innovation. And Innovation is really a big success story. Connected care is a very attractive investment category.
What's your perspective on the current market environment? Do you think it's a good time to invest?
Yeah, it's a great time to invest. And because of there's some AI threat thinking in the markets, and that means that some of the valuations of the quoted software groups slightly went down, and not that much, but there's less hype in the market. So I think if I look at valuations, we've always been disciplined. We've been paying the same kind of multiples for the last 8 years. It's hardly higher now than it was 8 years ago. And it's actually this year a bit lower than in the last 2 years. So we are acquiring companies for very attractive multiples. And I think it's a great time to invest. One of the things we did very well was we continued to do exits. A lot of private equity firms somehow found reasons to postpone their exits. And we always have said, be disciplined, sell, and maybe the difference is that you don't make 4.8 times your money, but you make 4.5 times your money. Just do it, sell it, and work a bit harder for it. That's our philosophy. So both exit markets and the investing markets have become more attractive. There are also new ways of generating liquidity. I mentioned the continuation vehicle. There are new sources of capital in the fundraising. I think Alterac is a perfect example of that. So all in all, exciting times, I think. And we want to stay focused on being a direct investor in only B2B enterprise software companies, and we can really scale our business that way without introducing all kinds of new strategies.
And how do you see the private equity market evolve over the medium to long term?
I see a positive trend towards more liquidity because of those continuation vehicles as an additional exit route. But also there's a very strong fundamental trend from public markets to private markets. The number of quoted companies is decreasing already for 15 years. And it says something about the quality of the private markets. It has a lot of advantages compared to being public. And wealthy people, wealthy entrepreneurs, family offices are increasingly discovering this. So you see also a favorable climate, I think, in the US regarding private equity, opening up pension schemes for private equity. So I see additional growth going forward. And we're still in the middle of a very lengthy growth wave of development of private capital markets.
Thank you very much, Charly, for presenting Main Capital Partners to us and sharing your insights in the market.
Thanks, Louis. It was great talking to you.